Hi traders, Marcus here with CEED.trading. If you feel like the market is broken, you're right. We're no longer trading value. We're trading a giant AI-driven meme stock. Between the zero-DT explosion and the sheer volume of index options, price action has become a mechanical byproduct of dealer hedging. When institutional meta orders collide with gamma hedging requirements, the physics of the move overrides everything else. So if you aren't mapping SPX and NDX or the index ETFs and strike levels directly onto your futures charts, you're trading with a blind spot. Today, I'm going to show you how I use a custom SierraChart study to automatically visualize these magnetic levels and the gamma exposure overlays. First, let's look at the source of the data. Here you can see the open interest dashboard on the CEED.trading website. And here you see all the open interest levels in a visual interface, in a histogram, and down here in table format. So you can view, for example, NDX, the cubes, or the sum of those two. Same for SPX, SPY, and the sum. And you see here the highlighted color. Now, what does that really mean? When I activate it, this shows me how much open interest was added from last night, or overnight. And this is important because if, for example, open interest was added on the call side here very close to the at the money strike, we can assume that this is short gamma from the dealer perspective. Because speculators tend to buy calls with a delta of 0.2, 0.3. I don't want to bore you with that because they have convexity and they're still cheap enough to get cheap leverage. If you go further out of the money, those calls are usually sold by yield harvesters. There's ETFs even that do this, or in general covered calls or various spreads. Because there's assignment risk, and to avoid that, you have to go far out of the money to eliminate this assignment risk. And you can also see equities here. These are all the Mag 7 stocks plus Broadcom, because these stocks have 3 weekly expirations on Monday, on Wednesday, and the biggest still on Fridays. The indices have 0DT every day. Every day has an expiration. Here you can also add, if you want to see today's expiration plus next. You can toggle this here. And there's also a quick view function for all the individual tickers where the biggest open interest was added. Okay, so you can check this out on the website. There's a 7-day free trial for all the custom studies, and also here for the general access to the web interface. But what does this look like on a futures chart? How can we transfer these bars, this histogram, to something like a open interest profile in a chart? For this purpose, for example, I can illustrate this here on NVIDIA. So this is also available for stocks. Here on the left hand, you see the open interest, which in this case shows the highlighted color, open interest change overnight. So these are newly added calls from the day before. In the studies, it looks like this. This is called the stock open interest bridge. Yeah, you can enter an API key here, and it will pull the data automatically from the database every day when the open interest is refreshed. And it will calculate the gamma, which is indicated here by the thickness of this bar. Yeah, the thicker this bar, the more gamma exposure at this particular level. And every day you simply do this data refresh, and you have the fresh data on your chart. You can do some other settings here, but I will illustrate the particulars of the settings in the NASDAQ chart, the MNQ chart. Which one do I want to use? I wanted to show you this one. Okay, so this is the same gamma exposure here on the right, the open interest bars on the left. In a second, I will tell you why this is relevant and important. But if you zoom out a little bit, you see that this is like an open interest profile, and how the open gamma exposure is illustrated here on the right. The total length of the bar would be 100% hedged strike level, and this is basically equivalent to the delta of this particular strike. You see a big put floor down here, and the biggest call wall or call open interest here on the upside, which is kind of like a framing the range for the trading day before the open. So when you go in the settings, and if you don't like this here on the left, or you want to see the strike labels, you simply go into the settings. This is called the Unified Market Open Interest Profile. And it's called unified because it includes the index and the ETF. Right now, this is the combined setting. If I only want to see the ETF open interest, I can do it like this, and also only see the index. You can see here on the left, the index strikes a little bit more granular, so you will see more of those. Let's make it combined. Then we see both, and it automatically adjusts the relative size. And then for the sake of visibility, we can also add the ETF label. And then it pops up and you see, okay, this is the equivalent of the 72 strike or the 725. Okay, you can double check this, for example, with the web open interest dashboard to see that everything is correct and mapped correctly. Because the ratio to map this to the futures chart is also pulled from the CEED.trading database. If you don't like the open interest bars on the left, you can also display them on the right. Yeah, for some people, this is too much clutter. Well, you can move it to either side you like. Yeah, for example, in this view, I would see clearly, okay, where is the closest large strike level, and I can act accordingly. Yeah, this is already after the close. But if you look for a sequence of trades with the open, you identify your upside call levels, your downside puts. Here 710 would have been the biggest put level as a potential target. The yellow line here indicates yesterday's previous day VWAP, which could be a natural mean reversion point. In this case, it would have coincided with the largest negative gamma point here on the downside. And on the upside, you also identify, okay, upside target 725, let's say, with some intermediate targets in between. Because what do you need for this to make sense? For example, down here, the cumulative delta volume would have to coincide to say, is the gamma level triggering the gamma hedging? Yeah, in this case, we could argue, yeah, it triggered it. Let's see what these levels were. Yeah, with intermediate targets 718, 720, and then here 722, and this big open interest from the index. Yeah, which is the cluster where today's high was basically made, right here in this area. Okay, and this way you can anticipate a scenario and position yourself accordingly. And as long as you have coinciding cumulative delta volume rising in this case, you can expect acceleration through gamma hedging to a particular strike of interest. Yeah, if there would be really heavy underlying buying interest visible in the CVD down here, then the 725 would have become relevant. Yeah, because you have to look at these gamma levels as kind of like a dormant, latent order flow. It needs to be activated, because if you have the gamma curve around this particular strike, the closer you get, the bigger the hedging pressure becomes, and gamma peaks at the money. Yeah, that's the biggest hedging pressure. But at some point, of course, long call holders will monetize their calls, and once they close their positions, the market maker can also unwind a portion of that hedge, which will trigger a mean reversion to a logical point, which could be a cluster of these previous footprints, or the 718 option strike. Yeah, like a smaller call wall, which in this case supported this down move. And then another squeeze up into potentially remaining options. Yeah, because not everybody monetizes at the same time. The theta cliff, meaning when time decay really kicks in, becomes drastic around let's say 2 hours before the close. Then your out of the money options will lose time value fairly quickly. Yeah. So this is the custom study to map open interest and gamma exposure of NDX, SPX, cubes, and the spiders directly on your futures chart. You can do this here with MNQ, but you can do the same thing with MES or the ES futures, and it will automatically detect the future symbol and pull the open interest levels accordingly. All right, if you like the information in this video, please give me a thumbs up, subscribe to the channel to get more updates on SierraChart tutorials or other interesting things that I can share with you. Check out the website. Like I said, all the custom studies come with a 7-day free trial. You can see if you like it. You will get also access to the web-based open interest dashboard. And in the future, there will be an AI-assisted analysis, which kind of brings all the open interest levels together including the equities, and generates a composite analysis on where hedging pressure could potentially arise on the call side or the put side. Yeah, so be prepared. Because this is not going to change. Yeah, the market is not going back to normal. These AI driven or AI meme market driven gamma squeezes seem to be the new baseline. Yeah, if you see outsized additions of calls, you got to be prepared to buy, and you can only sell this market if you have a sufficient amount, it seems, of puts added to the open interest and price actually moving there, and a catalyst moving it into the negative gamma zone in the first place. Yeah, because right now we're just gamma squeezing from one level to the next higher, and nobody wants to sell this. All right, like I said, trade the physics, not the noise, and I'll see you in the next video.